I'm Charlotte McLeod with investingnews.com, and here today with me is Steve Barton, host of the In It to Win It show. Thank you so much for being here. Great to have you.
It's great to be here. Thank you, Charlotte.
Really good to be talking to you. I'm excited for this conversation. And I thought it's our first time talking here on YouTube. And I think many of our audience members will probably be familiar with you. But I thought we could start with a little bit of a look at your background, how you came to this sector, and the work you're doing now at In It to Win It.
Well, thank you. Yeah, I come from I guess like a gambling background. So I used to play poker a lot, and I did that for about 15 years. And then I took a class on options trading maybe 8 years ago or so. And that kind of, I transitioned from poker into stocks. I realized that there was a lot of similarities there. It's pattern recognition, human psychology. And I found it was a lot easier to make money. You know, to move up in limits in poker, your competition doesn't get twice as good. It gets 4 or 5 times as good. But with picking stocks, whether you bet $100,000 or $100, your competition is essentially the same. So I really was drawn to the charts and finding patterns, and I've just always been good with pattern recognition, and it just fit right into my personality. So I love it. It's a lot of fun to me. I used to have a poker podcast, and so I would interview some of the big poker players. And then when I switched over to investing, I kind of fell into and found Rick Rule, Lobo Tigre, a lot of the guys that you talk to, and they've just been amazing mentors. And the commodities sector is, I think, just ripe for a massive, massive move. And I want to take part of that and make as much money as humanly possible. It's a lot of fun. I dig it.
Wow, I think that's a really interesting path to this sector. I never would have guessed, but it makes a lot of sense when you explain it. So on your YouTube channel, I know you're talking to a lot of similar people who I do interviews with and going over their thoughts, but you also sit down and go over your portfolio and what you're doing with your money. So I'm wondering if you can talk a little bit about your strategy and how your portfolio is looking right now.
Yeah. So I'm pretty much commodity based. I'm not super, like totally into, if all of a sudden the S&P 500 got cheap, I wouldn't be opposed to buying that either. I just think the opportunity right now is in natural resource investing, like by far. So a basic breakdown, this is rounding, but where I'm sitting now is 20% cash, 20% gold and gold stocks, 10% silver, 10% copper, 15% uranium, 15% oil and gas, and about the remaining 10% is mixed in with platinum, palladium, coal, and nickel. So that's kind of how I'm breaking it down. I'm so heavy into precious metals right now, fundamentally just because what our governments are doing around the world with fiat currencies. The more currencies they print and the bigger that balance sheet gets, it takes more of those currencies to buy the same ounce of gold or the same bar of silver. So I like those bets a lot. And, until we start hearing them, say things like they've balanced the budget, I think that bet is going to be on. They look good on the charts. I think that's where, I like having the majority of my holdings in those, but I think oil and gas is really cheap right now too. Uranium's a little bit expensive. I think it might be time to trim, but yeah, that's my basic breakdown.
That helps a lot. And we're going to go in many of those directions today and take a look at some of those charts. Before we start digging into that, I wanted to talk a little bit more about your approach. So, of course, you mentioned you like to look at the charts, but I know you also look at fundamentals. So how do you balance those? What's your approach there?
I would say about 75% is focused on the charts. That's my strength. I'm a pattern guy, so I excel at games like chess and finding constellations in the sky and finding patterns on stock charts. So that's where about 75% of my focus goes. The other 25% is on fundamentals. And to be totally authentic, most of that I pay for. So I'm a part of a bunch of paid subscriptions and a lot of free ones too. And I spend about a couple hours a day reading through those so that I know, between the interviews that I do and the newsletters that I subscribe to, that allows me to know which commodity I should be focusing on and also which companies I should be focusing on. Then I take that knowledge that I get from guys like Rick and I put them into the charts and I go, okay, I should be focusing on Agnico Eagle, let's find some entry points for Agnico Eagle, or I should be focusing on this uranium company. Where is a good entry point on this, and it's taught me patience as well. Just because you hear about a company one day doesn't mean you have to go and buy it that day. Like, time that with nice entry points on the charts. And that's what I do with my show is I literally put little arrows where I'm buying so people can follow along and, if they want to, buy around the same points.
I like the transparency there. You're sticking with what you're good at and you get help when you need it. I like that a lot. And just a small follow up there. Are you usually going in for short term or long term in the sectors that you're looking at?
If we're counting long term as longer than a year, I would say about 90% of my bets are a year or longer, right? If we're talking less than a year, I would say that's probably 10% of the portfolio is in, short duration options. I'm not doing day trading, but I'll do swing trades every now and then. So that's probably the breakdown.
So we've got a little bit of an idea of your strategy, what you're doing with your money right now. Let's get into some of those sectors that we mentioned at the beginning. So we are both just back from the Rules Symposium. And of course, gold was a really big focus there. And for me, for what I was hearing, I think people are wondering, okay, what is the summer going to look like for gold? But also, what does the rest of the year look like? How are we going to be looking when we get to the end of 2025? So I was hoping we could take a look at both of those elements for gold there.
Yeah, let me share my screen here, and we will go to the charting software. I love this software, Trading View. Okay, so here's the gold chart. This is basically what I see here. Kind of, this is on the daily chart right now. And so we have kind of a long-term trend line here going back to a little bit more than a year. This is March 2024. And we can see that in order to get a trend line, I like to have at least 3 points, right, where it touches. Anyone can draw a line between 2 points. That doesn't make a trend line, but 3 do. And the more points, the more times it touches that trend line, the more reliable it is, right? So we've got one here, one there, another one here, right? We got a whole bunch of them. And we can just project that outward. And this will act as quite a bit of level support if gold were to get down here, which is around 3,000. Another heavy line of support right here is this rising 200-day moving average, which every trader on the planet has the 200-day moving average on their screen. So you need to have that on your screen as well, because it kind of becomes this self-fulfilling prophecy. If we're all looking at this 200-day moving average, we're all recognizing this as support or resistance, depending on where it is on the chart. So worst case scenario, I see gold coming back down here to around the 3,000 level and hitting right on that 200-day moving average before it bounces back up. Most likely, I would say, is that we kind of grind sideways here for, sideways to down for the next month or so before moving back up again. But as far as projections, what we can do, we have also got the shorter term trend line since the beginning of the year. Which is fairly reliable. Now this is going to act as a little bit of resistance, but I think that's probably the most likely level for gold. This is probably going to grind sideways here for another little while. We don't really find good buy points until we get the RSI down here. The MACD is showing a little bit more to the downside. If we want to do projections, what we could do is we could do what's called a Fibonacci extension. And if I go to the weekly chart here to bring it out, you can see this massive cup and handle that is finally broken out to the upside. And what's interesting about cup and handles is you can measure their upside target. And so what you do is you get your little handy dandy tool right here, and you measure from the bottom of the cup to the top right here. And then you can project this same price action up to there. And we can see that the first one's already been achieved, right? It went from 1,000 down here, basically up to 2,000. And then we just take that projection up and put it right up there, and it brings it right around 3,100 or so. We exceeded that. Now, the next way that you could measure that is you could do it in logarithmic. So basically, instead of doing the dollar amount move, is you do the percentage move. So from down here up to here is about 100% move. It says 97, but we'll just call it 100. Then what you do is you measure from the breakout, from the handle, and you go up 100% again, and that's going to bring us all the way up into the above 4,000 level. So when does that happen? I I think we'll probably be around 4,000 by the end of the year. Maybe I shouldn't put time frames on this, but I feel pretty confident in that call. I think we're going to grind sideways a little bit more for our next leg up. Another thing you could do is, I alluded to, was the Fibonacci extension. And so you basically take from this last low up to the high, down to the low, and we can see levels here, right? And you can see where it'll kind of grind sideways a little bit around these levels. We got another price target up here around 4,000. So that extension hits at the same point, or around the same point that the logarithmic on the cup and handle hit. That would be my next upside target in gold.
All right. So 4,000 potentially by the end of the year. I'm hearing a lot of people say that, so it might not be quite as outlandish as it might have sounded before. And you answered this a little bit, but I was going to ask you, okay, people who are looking at this, where are our entry points right now for gold? It sounds like if we're going to 4,000, it could very well be now that you might want to get in. Yeah,
I would do limit orders. I like limit orders a lot. Kind of let the price come to you. I'm kind of a bottom picker, I like falling knives. But if you, let's say you have no gold, I think now is fine. This blue line right here is the 50-day moving average, and that seems to be just kind of obeyed since the beginning of the year. If you bought anywhere around this 50-day moving average for the last, I don't know, a couple of years, you're doing pretty well, so I think taking a position now is fine. But levels to watch if you want to have some limit orders, I would look down here around 3,200, then another one down around 3,050 or so. And if it gets down to this 200-day moving average, I think that would be a back up the truck moment. Although every day that goes by, I think that's becoming less and less likely. We're in the gold bull market now, and we have been since we broke out of this cup and handle. And, this is one of those where it's like you just kind of need to get on the train.
Fair enough. I think that makes a lot of sense. And just a quick follow-up question on your setup here. You're mentioning if you're doing this type of analysis, you've got to have that 200-day moving average on your screen to be looking at. Everybody is seeing that. Anything else for people who are trying to get into technical analysis, get this set up, that they should really be looking at when they do it?
Yeah, I did a whole series on this. This is on my website. And basically, I like the RSI. I like the MACD. I like the moving averages. I like the 20, the 50, and the 200. Sometimes with some of these commodities, I'll pull up different moving averages depending on the commodity. Like the 150 day on gold is sometimes kind of interesting, and so is the 400 day. But those are the main ones. You want price action, the price chart, because without that, there is no chart. You want, 20, 50, 200. Volume is important. RSI is important. MACD is important, in my opinion. And trend lines. Trend lines can be very, very beneficial. I don't think it's a coincidence that it just happened to hit all these points, right? I don't think it's a coincidence that it just happened to hit all of these. There's millions of traders around the world looking at the same chart I am, and we're all picking those spots as little buy points, and that's why it stops there.
Great to go into that. I can link to your educational video in the section below so that people can take a look if they want to learn more on that. I want to also make sure to talk about the gold stocks with you, and I'm curious where you are seeing the most opportunity right now. We can talk about specific names or types of companies. You can go in whichever direction that you want to take that.
Okay. I recently just sold Barrick and sold Newmont. So I had about 4% of my portfolio, and literally on Friday, I sold them. Newmont's chief financial officer just resigned, which according to Rick Rule is not a good sign. Barrick's having a lot of problems in Mali, and I think I'm going to rotate those into Equinox. So this would be my one that I think where we are, I believe, in the gold cycle right now is the majors have performed. And so I think what we're looking at is here's Agnico Eagle, just to give you an idea. This thing has just absolutely killed it. When everyone was, all the people we were interviewing was telling us that, Newmont, Barrick, Agnico Eagle were all cheap. This is where we're buying it. And look at where it is now. I mean, this is just absolutely smoked it. And I think now we need to rotate some of this money into some of the mid tiers. According to Rick, that's kind of where we are in the cycle. Is the majors have performed. Now the next leg is going to be the mid tiers, like Equinox, right? So moving from a $40 billion company to a few billion dollar company, I think this one's going to do really well for the next cycle. And so I've been accumulating this one for almost a year now, just rotating out of the majors into this one, and I'll probably do another one. These are levels that I like for a buy, is basically now, right around this 200-day moving average. And then I like 560 as another limit order down, and then kind of your back up the truck moment would be down here at $5. I do not think it's likely that it'll get down to $5, maybe a 15% probability. But, it doesn't hurt to put in a limit order. It takes almost no effort. So if it gets down there intraday, like just a spike down like this one over here, then at least you snag it. I really believe in this one. I've actually even got some call options on this one, because I think that there's some catalysts in the near term where it could move up. They've got 3 mines down in Mexico, and it looks like they reached an agreement on 2 of them. And I don't think the market's pricing that in yet. So I like this one as far as like a deal now. I don't see any entries on like Agnico Eagle. It's just way too high in the clouds. Need to wait for a pullback. I also like Banyan Gold. I just took a position on this one after the symposium. These are the levels that I like it at: 20 cents, 18 and a half, and 16 on the OTC. They just basically found their starter pit, and I don't think the market's really pricing that in as well. And I don't think they realize how significant that is. So I took a position on it. And those are probably 2 that I like right now as far as finding an entry point on the chart and relatively cheap.
Well, thank you for going into those stocks. And just a quick note on what I've heard, I guess, recently about the gold companies. I think for quite a while, it was, this disconnect between the gold price performance and what the gold companies were doing. It seems like that is resolving. So would you say for those top companies that you're mentioning, the big miners, that's resolved, and the disconnect is more about catching up the mid-tier and smaller companies at this point?
I think so. The way Rick described it to me is basically, this cycle is very predictable, and it's following it to a T. And that is, the majors moved. Now we got to find the mid tiers and the juniors that are going to move the most next. So yeah, I mean, this is just, what is that? 163%. You got to pay yourself. You know what I mean? Move it into the next one. Whereas when we do Equinox down here, and if you kind of take the same time frame, 60%, not as much. This will be the next one, I think, that does a couple of 100%, whereas Agnico Eagle might only go up 50. Does that make sense?
It makes sense. It makes sense. And it is really interesting to see the cycle play out kind of exactly how we've been told that it will go. So can only imagine that it will keep going in that way. I also want to make sure to go over silver with you. So silver, a lot of really interesting price activity recently, and another big topic at the Rules Symposium. I think that silver investors are feeling cautiously optimistic. They have been hurt before, but they're excited to see the price move. So when you look at silver, is your sense that this is a real move that's going to keep going higher, or are we going to see some of that typical silver volatility?
This is significant. Let me bump out here to actually, I'll go to the monthly chart so we can see all the way back to 1970. Okay. So massive, chart here, very, very bullish looking, right? And if I zoom in here a little bit and go back to the last, decade or so, or 2 decades, you can see that the last time the silver price was up here was way the heck back here in, 2011. Right. So this is significant, having the price, jumping up so much like this. And we're consistently getting weekly and monthly closes higher than we have in over a decade. So this is real. I think what we've all been betting on for a while is finally happening. Now, does that mean jump in right now? I don't necessarily think so. There are some patterns that we can use here to kind of guess where it could go next. One of them is a bull flag pattern. So we had the pole going up, and then we have a flag forming out like this, right? This is a bullish pattern. And I like to, confirm back down here with the MACD. So there's several things that we can find for a bull flag, and you've got basically rising volume on the pull, right, and rising price action. Then as the flag forms out, you got decreasing volume down here, and then increasing volume as it breaks out up here. Same with the MACD. If you use this formula right here, you'll see the blue on the pull, then the histogram goes down to red, and then it breaks out blue again just as it's breaking out. I mean, this looks like a pretty textbook one to me. And now, as far as getting a measured upside target, measure like this, measure the pull, drag it up to the breakout. Let me shrink this down and see what number we got. And it's like 41.50, 41 is around the range where I would kind of expect this to play out. I thought that this last week we would continue moving up to those levels. It looks like it's going to take a bit of a breather, and I don't know, maybe there's a whole bunch of people shorting it, but yeah, I think that's the next target for silver is going to be around 41.50.
Okay, I think that makes a lot of sense. And if we look, can we look a little bit further into silver's future? I know a lot of people are wondering, okay, once we get past that $40 level, a lot of the time I hear there's not much resistance then, and we can go to that 50 level. But what do you see?
Oh, I see exactly the same thing. I mean, follow the price action over here back to the 80s. Like this one got up to 50 like intraday. It's not even showing on the chart. This one over here back in 2011, same thing. There's not, the way you read these charts is like, if you see a lot of price action around this level, that means that's where everyone's got their orders set. You know, so around 17, 18 bucks, there's a lot of resistance and support to kind of chew through. We don't have much over here because it hasn't really been done that much. Does that make sense? There's no price action back there to stop it. So we got a tiny bit at 40 to 41, but after that, it's kind of, you know, clear skies above. So another important thing I think about this recent move up right here, just it took a while to chew through this 37 bucks, and now we're above it, is the floor has moved up on silver. So the floor before, I think, was around 26.50 or so, like this back here and back there. Now I think the floor is closer to like the low 30s, right? So I would be shocked if we ever see $30 silver again. I just don't think that's going to happen. You know, as far as like a general floor, you can follow this 200-day moving average, which right now is around 33 bucks. So that's the real significant thing on this move here is it's not necessarily the price that it's up to, it's where the floor has moved up to.
That's a really good takeaway. Thanks for sharing that one. And one more point on silver before we move on. Is there anything you can share about how you're approaching this space? Because it is a much smaller universe than gold, as we know.
Yeah, I think for most people, just start out with this one, the PSLV. This is the Sprott Physical Silvers Trust. This is where you can take your physical position. And what I'm going to be doing here shortly is I've traded this thing before, but I've just got a position that I've just held here since, you know, over a year ago. I'm probably going to rotate out of this and into some more silver miners. So this is one that's real easy for most people is just SIL. The big holding of this one is Wheaton Precious Metals because they've got a huge silver exposure. I think this is a decent one. Here's the limit order levels that I like on this one, 47.50, 43, and 40. And then SILJ, if you want to get a little bit more on the risk curve, like more junior silver miners. These are the levels that I like as entry points on that one. And then get into one of the bigger silver companies. So Pan American Silver just acquired MAG. And I think when your average investor steps into this space, they're going to Google silver miners, and Pan American Silver is going to be one of the first one that comes up. I really like this company. I guess I'm kind of a Ross Beatty fanboy. And yeah, I think this is where you go next. And then after that, I'm going to be moving here like this week into some junior silver miners. One that I'm eyeing right now is Aya Gold and Silver. This is on the OTC, but I think a buy now is fine, you know, anywhere around this 200-day moving average. And all this is just a Fibonacci retracement. So these would be my limit orders down here on this one. So this is the 38% retracement, 50%, 61.8. And I just like those as entry points. We're about to get a golden cross on this, which means the 50-day moving average is about ready to cross above the 200-day moving average. And That's a very bullish sign. I think this one will do well. I really do. They have a pure silver mine down in Morocco. And I mean, talk about leverage the silver price. Like this one should do really well. Yeah.
Yeah. As we know, there's not a whole lot of pure silver mines or projects out there. So that is great to go into as well. And you mentioned, okay, when these generalist investors come, they start to Google, this is what they're going to find. Any sense from you on if we are seeing some of that generalist interest in gold or silver or elsewhere in the resource sector, or if that's really like still down the path right now?
I don't think so, because I think when people come into silver here, you and I aren't going to be talking, all excited to hear about a $2 move. I think it's going to be quick and it's going to be violent, and there will be no debate. I don't think we're going to have these little tiny moves and I'm going to be measuring targets for like 50 cents up. No, I think this is going to be a massive thing. It'll be above $50. And there will be no denying that generalist money has come into this thing. I don't see rocket ships or anything on Twitter yet for that. I don't think we're there yet at all.
No, you're right. The rocket emojis are not yet out in full force, or maybe any kind of force. Okay, so we'll know when it happens for silver. All right. So I love to talk about the precious metals, but I want to get your take on uranium as well. This is another favorite for our audience. And I'm curious, the price has been, I know it's moved, but it had been for about a year and a half pretty flat there. And I think people felt a little disheartened with the market. So I'm curious about what your approach to this sector is at the moment.
Okay. So uranium, this is probably my favorite one, simply because it's been so profitable, is, So this is the spot price of uranium. Okay. So what this means is this is the price of uranium when the contracts are less than 12 months, right? So they sign contracts to sell this stuff, and people and utilities will either buy this off of the spot market, which is what we're looking at now, or they'll buy it off the term market, which is 12 months or longer. And if we look at what the lowest term price contract right now, that chart, let me get rid of these so the chart is a little bit easier to read, and then I will make this a line chart. So that's the spot price of uranium. And this is kind of what the term price looks like. Okay. It looks like that. So what that means is going into the future, uranium is 12 months are out. Uranium is minimum selling for $80 a pound, but right now on the spot market, it's selling for $71.15. So we have to do some catch up here. So that the cheapest price per pound of uranium a year from now is $80, and it's selling for $71.15, right? There's some catch up that has to happen there. Now, if we go into some of the uranium equities, we can see that we've just had a massive run here on, I'll pull up URNM, right? So since this little blip down, if we go to the same time, Liberation Day sell-off right here around there, we haven't had a whole heck of a lot of movement here on the spot price chart, right? It's just from there to where we are now, 10%. I mean, it got up to 23. But if we look over here on the uranium equities side, that is a very, very different story, right? The chart looks completely different. Now we're up over 70%. Okay. So I don't think now is a terrible time to trim, right? 70% move in 3 months. I mean, look at this one, Uranium Energy Corporation. My God, they from the bottom here, this is over a double, 104%. So that's usually is not supposed to happen in 3 months' time. And we can see that this has followed patterns like that before, right? Might be a nice time to trim. So I like uranium a lot, but I think we're getting a little ahead of our skis here in the equities. And I think at some point you got to pay yourself. And when you get a blow off top like that, other indicators that tell me to sell is the RSI right here. It's a 72. That's really high. Alarm bells should be going off in your head when you see this get above 70, and we are. MACD looks like, I mean, it could keep going higher, but you had a double in 3 months. Like, what were you hoping for? You know what I mean? Like, you did it. So I think as far as uranium, at some point you got to pay yourself. Doesn't hurt to trim.
Right. Yeah, I know it can be really hard for people to sell. So good points there. I think that's important to cover. And this is maybe a little bit on the fundamental side for uranium, but I'm wondering where you see it in the cycle right now. So we're at this point where you might want to take profits if you've been in it. In the long term, where do you see it?
Oh God, we're going to kill it. I think we're going to do this again. I think this is going to overshoot. And I think it's, yeah, I mean, when I talk to Justin Hune, I mean, I think this stuff is going to well over $100 a pound, but it tends to overshoot. Look at what the spot price did. I mean, I just drew this line, but if you go to Cameco's website, they have exactly what it is, but it looks pretty close to this. It tends to overshoot like this. And so on the next overshoot like that, sell almost everything, just like we did back here, and then rinse and repeat. And if Justin is right, and I believe him because he studies this a lot more than I do, he thinks we're going to have 2 or 3 more of these blow-off spikes and then retracements, because this is a very, very small niche market. Most people do not, I mean, everyone in our circle follows it, but that's not most of the planet, so, you need to, I think we're going to do another one of those again as it goes higher, and then another one again. And the beauty of this is you can trade these and make a lot more money than just buying here and holding on through that whole cycle. I mean, this was an amazing place to take profits and then put it in gold, which is exactly what we did. Now those gold miners have run. We're going to take profits from those and move it into something else. It's just what I look at it as, like, whatever is like out of favor and hated in the moment, that's probably what you need to buy. And whatever you see rocket ship emojis for right now, like you do on uranium, might be time to take some profits.
Good advice. And I think that gives me a nice way to transition into the next thing I wanted to ask you. So we've gone through gold, silver, uranium. Like I mentioned, these are some of the topics that our audience likes to hear about the most. But I'm curious where else you are seeing opportunity right now. I know you mentioned oil and gas, but I'll put it over to you and you can let me know what you're seeing.
Yeah, I'm liking oil and gas a lot right now. So this is the WTI chart. Let me zoom in here. And what we got, I already drew it for my, is we've got a bear flag. So dropping down, bearish consolidation. I think it's very likely that this is going to drop down. Now, the measured target, just like we did before, you just take the pole and then drag it down to the breakout here, is showing $51. I have a hard time believing that. But I do think it's going to drop down. I think it's more likely that it'll probably get to 55 to 57. We'll call that, kind of my ballpark guess. But what I like about oil right now a lot is all the oil experts I talk to seem to agree around $60 a barrel seems to be kind of like the break-even point where the oil companies can make a tiny bit of money and they don't have to close some of their oil wells, right? Well, once you start getting below that, then they're essentially losing money every time they pull this stuff out of the ground. So they're going to start closing a lot of these, and then the supply will dry up a little bit, and then the cycle will repeat. So I like the fact that it looks like oil is going to drop here because it gives us some real opportunities. So easy ETF to bet on here is XLE. It's got the heaviest weighting is Exxon. And according to Rick, that is the best oil company on the planet. And the second biggest weighting is Chevron, which is the second best oil company on the planet. So the two biggest ones, and a lot that, a lot of people can get in a real easy ETF, is this one, XLE. And here are the points that I like it at. I like it at 84.50, 81.50, and then a stink bid down here at 79.25. And the amazing thing about the oil is it can have some violent resets. Like, look at what it did here on Liberation Day. Just absolutely just smoke show to the downside, right? We could have waterfall sell-offs like this in this again, and I think we might, if I'm right about that bear flag on WTI, is this will just drop out of the sky. And so if you have these limit orders set beforehand, then the computer does it for you. They just fire and they hit, and then boom, you're in. I think that's an easy one. ExxonMobil, I think now is fine. Like, basically the red line is, I deleted it because it was at 108, so it hit. I like it right there. I like it at 103.25 and then $100. And all I'm doing is I'm just looking at price action going back. And I think that this chart over the next 3 to 5 years will kind of look like it did, back here, like after COVID, how we just had a nice steady plug up. This thing pays 4% dividend. I like it a lot. So those would be my two probably best picks. Would be XLE for your generalist investor, and if you just want the best company, then I would get Exxon. And now is fine,
Right. And I think you mentioned a little bit, but what would be the time frame for you on this?
3 to 5 years. Yeah. Yeah. I mean, if we have an event where, oil spikes up to $130, I'm going to change my tune real quick. But, barring that, yeah.
Yeah. Okay. Makes a lot of sense. And I feel like that's kind of a similar thing that I've been hearing from Rick Rule as well. So great to get your thoughts on that. All right. Well, we've covered a lot of the topics that I wanted to go through with you. I will let you go, but before I do, just any final thoughts you would leave investors with? I know it's an interesting time to be in the market for sure.
I would say try to find stuff that's hated, right? Like this company right here, Devon. There's another oil and gas play. This was a deal at $40 and now it's down at 32. This company is just absolutely just printing cash and no one cares. So try to find companies that are just unloved, out of favor. Another one is, let me pull up the nickel chart here. Okay, I'm going to zoom out here on the weekly. Like my brother said it best. He's not a trader, but he has the right ideas. He's like, buy on this end of the chart and sell on this end of the chart. If the chart is just screaming higher, maybe you should look for something else. Nickel's really hated right now. I think there's a decent case for nickel. Just like when we went into platinum, right? Platinum just did nothing for ever. For a decade. It just hung around $900 to $1,000, and now we've finally broken out. Well, you got to be the guy that's buying it over here when no one cares, right? The story with platinum was we're consuming 7 million ounces of platinum as a planet every year, but we're only mining 6. And a lot of these platinum miners are shutting down because they're not profitable. That means there's going to be a re-rating. You have no idea when, but buy it when it's boring and $900 and no one cares. And then you get to ride the wave up. So I think that would be it. Pay attention to what's unloved and hated and buy that.
Makes a lot of sense. And I can tell you with certainty, I don't think anyone else is talking to me about nickel right now. So maybe that is a sign to start looking at that. Well, thank you. Thank you so much for coming on to go into all these different parts of the market. This was really great.
Well, thank you for having me, Charlotte. I really appreciate it. This was fun.
Of course. Well, I'm sure we'll have you back again soon. For now, once again, I'm Charlotte McLeod with investingnews.com. And this is Steve Barton with In It to Win It.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.